I got my boots on the ground, actually boots on the ground, teaching and coaching to really kind of help you guys see that it's easy to really have passive income where you have money coming in, where you're not having to work for it.
When we first became your clients, I guess before COVID, about 10 years ago, you told us to do a couple of things, and so we actually paid off a lot of things. And one of the things we paid off is our home. What would be your suggestion if we wanted to, I guess, take equity or whatever? I don't know. So, what
Yeah,
would you suggest?
I only recommend it. And I would recommend everybody take equity out your house because we are eventually going to go into a recession. Technically speaking, we was in a recession in 2024, and early 2025. So the true definition of a recession is when you
Mm,
have two negative quarters of GDP, which means the economy slowed down for 6 months. That happened in 2024. It also happened in 2025. These politicians, they move the goalpost under Biden and Trump. Now, I ain't a Trump fan, but just be under
right.
and Trump, it happens. So yeah, but because of the spending that we're doing, because of the us not getting money back with the tariffs, because of what's going on with Iran, it's going to be a recession in 2027, not late 2026. Like it's going to
Mm,
happen. It's going to happen. Now, be clear. The stock market and the economy is two different things. Just because it's a recession doesn't mean the stock market is going to go crashing. I'm not saying that. But if we do have a recession, the banks, they tighten up. They don't lend as much money,
mhm,
allow you to take as much. They ask more questions. So for that reason, if you have a HELOC, a home equity line of credit, even if you don't use it, they can't take it away from, right? So let's say
mhm.
you have $200,000 of equity in your house, equity line of credit. Now that money's there, you don't have to use it and you don't pay
Okay.
interest. And you don't pay interest on what you don't use. So you can have it sit there for 2, 3, 4 years. You're not paying any interest. Now, yes, your credit union might charge you like a $500 a year service fee, but that's okay because you still have access to that quote unquote $200,000. So with that HELOC, with that money, that's what
Mhm,
you use for you and Eric, Mr. Oliver. That's what you guys would use to either do a down payment on that property that you're looking at in Ohio,
mhm.
or if you want to do a rental property here in Jacksonville, that's where that money will come from. And of course, since it's tied to your mortgage, the
Mhm.
HELOC is a tax deduction. So whatever you
Okay.
borrow, you're going to get that money back from a tax deduction standpoint. And then of course you're using that to fund property. So we'll be able to do those advanced tax strategies to make sure that, we're not paying taxes either as we're getting that rental income that we bring in.
I guess my second question, piggybacking off of that. So, would it be best that we do the line of credit or do the credit card second or do both?
Ooh, I mean, so from an interest rate standpoint, if we're able to get a 0% interest rate, then that would be better because I'd rather you,
Okay.
no interest over 12 months than some interest.
Okay.
But I would say you still want to do the HELOC. This goes for everybody. Anybody that has a primary house, you still want to do the home equity line of credit because if we do get into a recession, you need it's going to be tougher to get money. Doesn't matter your income, just period. In a recession, banks tighten up, right? So because of that, us being able to get or have access to more money is just better. So you might as well just take it out now. If you don't need it, don't use it. So if you do have a recession next year, which I think we will, and you want to do real estate deals or you want to do something, you then have the equity or the money to do that compared to not doing it, trying to get a home equity line of credit next year, and the banks say no because they tighten up on everything.
Okay. Well, Mario, I do appreciate you because you're through your guidance, you put us in a position for me to even I can even ask these types of questions. So I think Eric is on the call too. So I think he heard what you said about those different options. I do appreciate that.
Hey, I just want to thank you, man. I was listening to everything you were saying. My wife and I were pretty excited about starting the new step in our lives. We got everything basically paid off, cars, house, everything, by just following your lead. So we thank you so much for the education that you're pumping out towards us.
Yeah, yeah, yeah. Susan, you had a question?
As what would be my first step to take out a HELOC loan? Would I do that through my mortgage company?
Yeah, great question. So I'm doing like best, medium, and worst. The worst is your bank. I never recommend a person use a bank because the bank is always going to give you the worst. I mean, don't care unless you got. I know you got a lot of money, Susan, but unless you got millions upon millions of dollars, they don't care about you. So I would not say use the bank. That'd be like the last choice. The one in the medium would be your mortgage company, but you probably want to look at Rocket Mortgage, which Quicken Loans, Rocket, same thing. They're very, very fast. They're very, very reasonable as well. So like that would be kind of like in the middle. The best is your credit union, because credit unions always give the best rates. Credit unions are definitely the most friendly. The issue with credit unions is that they're slow, they're extremely slow, and they're strenuous. Like they're gonna look at things with a microscope. They're gonna want all the documents that they could possibly get. Right?
Okay.
They will ask for, instead of 1 year of your W-2s, they might ask for 3 years. They might ask for 5 years of tax returns. They ask is, they want all your blood. They want everything.
Gotcha.
Right?
Okay.
But to that point though, but then if you're approved, then you probably gonna get the best the best interest rate compared to, like I said, like a Rocket Mortgage. They might ask for 1 year of them 1 year of your W-2. They might ask for 1 year of tax returns. They might ask for 1 month of your bank statements instead of 12 months like a credit union. So
Okay.
the interest rates might be a little bit higher, but like they're kind of like that happy medium. But the worst is the banks. Like I say, when it comes to loans, car loans, or mortgages, the worst is the bank.
Okay. Thank you so much.
You guys be blessed. Have a good one.
You as well. Thank you so much.
All right, peace.